Hello and welcome to this week's TCA Crossroads. On today's episode, we are talking to the Toronto Stock Exchange. So if you're an entrepreneur trying to figure out how to take your company public, stick around for that. I'm also catching up with David Friedman on some of the local Orange County startup events. We've had some really great events this summer. We're going to catch up on that, so stick around. Hey, David, how are you today? Great to see you.
Yeah, great to see you too, Carson. It's been a little while. Always a pleasure.
Likewise, same here. Yeah, we took a couple of weeks off there because I've been really busy. I know you've been really busy. What have you been
Yeah.
up to?
Well, I've been doing a lot of work in the ecosystem. This week was crazy. I was at the OC Startup event. We had looked like about 1,000 people in Irvine. Then I was doing some work with JJ Risha on Pismo Ventures. They have a new pitch contest. And last night I was at the Chapman Garage, that's the entrepreneurial center, talking about how to give the perfect pitch to some entrepreneurs and some of the faculty there. So it's been exciting. It's been great as we end this year. It's not slowing down. It's been phenomenal. That's all I can say.
Yeah, I think we're really starting to pick up some momentum with the events. Like, yeah, I was at the SoCal Startup Day. Some great angels talking, some great VCs talking. Lot of people. I was even talking to folks that drove down from Hollywood, drove down from LA. Really great showing and encouraging of the Southern California startup ecosystem. And David, give me a little more detail on what Chapman's doing. What is this? What is this garage?
Well, Chapman, the garage was I think was the initial place where the funder, the guy named Chapman, I think his name was Charlie Chapman of all things. That keeps strange name, but he made money on, from what I understand, on Valencia oranges, and he started his little business in that garage. So the garage is now the entrepreneurial innovation center for Chapman, as they have, an entrepreneurial studies, curriculum. So it's just called the garage. It's now made into offices, and it's used for a gathering of all the entrepreneurs and the little teams. They have little rooms there and all. Um, that's what it's called. So
Super
that's
cool.
where I spend some time.
Super cool. Hopefully, there's still that mojo in the air of entrepreneurship from those previous generations. Hey, I wanted to ask you something. Did you see this crazy thing that just came out? It was just announced yesterday. It's called the AI pin. Have you seen this thing?
No, not yet, but I'm sure you're going to share it with us.
Yeah, I got to talk
Apparently,
about
you
it.
have it.
I don't have it yet. I'm basically going to be advertising for them. I think it's going on pre-sale next week, but it's a full computer that you wear as a pin. You can pin it to your jacket, your shirt. It has a built-in camera, microphone, speaker, a full cellular plan that you get from T-Mobile, and it could literally be the next phase of computing after mobile. I think the New York Times covered it, and you basically interact with it with pure voice, like straight out of Star Trek, and you can ask it anything you want. You use the camera, for example, you can show it what you're eating, and you can say how many calories is this, and track it as to how many calories I've had all day. It looks phenomenal. As a techie nerd, I'm so excited about it. I really recommend everybody go check it out. The company's called Humane, HU.MA.NE. That's their domain. It'll be about
So I have a question.
$700.
This sounds like the next generation of Google Glass.
Yeah. Hopefully, we won't get too many glass holes with this
Well,
technology. I don't know if you heard that
by the way,
term.
that didn't sound real good.
That's literally the term that they came up with for the Google Glass people. They called them glass holes.
Oh, okay. Yeah.
Because
This is a family show. Remember that.
yeah. I'm not saying anything bad. I'm saying the word glass and the word
I'm just
holes.
saying.
And uh, and yeah, but so we saw Google Glass didn't take off. It was ahead of its time. It didn't have enough
Right.
utility. But this thing, you will be able to walk into a room and say, "Oh, when was the last time I talked to David?" And it'll probably be able to tell you that because it has access to your calendar, it has access to your emails. It's phenomenal. It just seems like we're taking a huge leap forward in AI technology. So, all right, just want to
Well,
chat about that. But I
that'll be my
think,
Christmas gift from you this year, right?
okay. Let me check if you've been a good boy this year, and then we'll see if we can pony up $700. All right. Well, I think we have a really interesting guest today, right, David? Who do we got on?
We Yeah, I'm excited. I've known Delilah Panio is the vice president of the Toronto Stock Exchange. And I've known her for several years. She's been a very good fixture, a good partner in the ecosystem. And I think she'll offer a lot of value to the listeners today.
All right. Well, let's bring her on. Delilah, here you go. Welcome to the podcast, Delilah. Great to see you. How are you today?
Hey guys, so great to be here. Happy Friday.
Yes,
Happy
yes. Happy
Friday.
Friday. Welcome, welcome. So, why don't you tell us a little bit about yourself and what you do at the Toronto Stock Exchange?
Sure. So it's such an honor to be here. As David said, I've known him for several years. I was also at SoCal Startup Day, so that was a super cool event to see everybody out and representing Southern California and all the innovation that happens here. So I've been in the capital markets for over 20 years, and I have advised companies both in Canada and the US from bootstrapping all the way up to IPO. I was at TSX for 10 years in Toronto. And then I actually left about 12 years ago, moved to LA for sunshine, obviously. And as a Canadian, I find winter to be highly unnecessary. And so I'm grateful to be now representing
Well,
the Canadian capital
well,
markets in SoCal.
good news. We're doing away with winter on a global scale, just so you know. It's just not even going to be a thing anymore in the next few generations.
Sadly, true.
Yeah.
So I was in LA. Actually had a startup. So I understand the reality and the challenges of starting a company. I was a classic successful corporate MBA gal and said, "How hard could it be to start a company?" And moved to LA. Turns out it's pretty hard. Raised some money, didn't work, but makes me much better at my job now. I have a lot more understanding, compassion for the realities of
I
raising
got to
capital.
ask,
Yes.
what were you trying to solve? What was the company? What was the product?
So the company was actually called Stiletto Dash, and it was a digital media company for women business travelers. Because I was a total road warrior back in the day, and I could have used all those tips and tools and things to make my life easier. But turns out I didn't know anything about that business. I mean, my expertise is in talking to capital markets people about raising capital and not digital media. So I was the customer, but anyways, I have a lot of compassion
Got
for
it.
CEOs for starting companies. So TSX decided to put people in market. I was already here. So about 5.5 years ago, I came back to Toronto Stock Exchange, but doing it in one of the incredible centers of innovation in the world. So I just have the best job.
So let
Awesome.
me ask you. I mean, so now you're with the Toronto Stock Exchange, and people understand there's the Toronto Stock Exchange, and that's like the Canadian comp for
Mhm.
NYSE or the NASDAQ. But tell us about this other component of the Toronto Stock Exchange called venture. What is that relative to the stock exchange, and how does that affect or how does that help startups?
Great question. So yes, uniquely in Canada, we have a two-tier market. We have Toronto Stock Exchange for more senior, revenue generating production companies, and we uniquely have TSX Venture Exchange, which is one of the only regulated public venture capital markets in the world. So if we think about that term, public venture capital, what does that mean? It means that we are financing companies at the venture stages. So we're talking about Series A, Series B, pre-revenue companies. Very uniquely, we list companies that are just on that track for innovation and for CEOs, and especially those in the US, looking for that alternative to private venture capital. So they're looking for another option, another way to grow their business. And so we have been doing this for many, many decades. In Canada, we're just really good at small public companies. We have an infrastructure, whether that's the exchange, our listing requirements, the securities commissions, investors, analysts, everybody's sort of in that ecosystem for taking a company public. understands and embraces small public companies as a pipeline to get to Toronto Stock Exchange and then other senior markets in the world. So relative in the US, in the public markets, there's the over-the-counter market, the OTC market, which is unregulated or doesn't have the same regulation and protections in place. And then you have NASDAQ and New York Stock Exchange, which even though technically you can list at an earlier stage, the question is, should you, because you'll be a tiny company in the world's largest capital market. So we just offer something that's very unique just because of our background of having, if you think about our history of 170 years of listing, mining and oil and gas exploration companies. So these are tiny, high risk, but high growth potential companies. And we just have a marketplace for companies like that.
Let me ask you this. Now, we're talking about the Canadian Toronto Stock Exchange. How does that jive with somebody in the US? Let's say I have a startup in Southern California. Why would they apply to the TSX Venture? And how do you guys, and the second component of that is you talk about A round and B round and all, how do you see yourself working with angel groups or smaller VC groups such as Tech Coast Angels?
Yeah, so the big question obviously is, why in the world would a US company that is in the largest capital market in the world be talking to me about going public and raising capital in Canada? And the reason is, as I was mentioning, because the public and private markets in the US aren't the right fit for all companies. And so there's a gap here, right? So if you are a high growth company, your goal is to get to NASDAQ one day. So you're genuinely building a world-class company that's going to be on NASDAQ one day. You are looking for an alternative to private venture capital because you want to maintain control of your company. Here's the thing, when you go public on TSX Venture, everyone's a common shareholder. There are no pref share guys on your cap table. So that means you are controlling the company longer than if you take venture capital. Nothing wrong with venture capital, just a different kind of money, right? So you're high growth, want to get to NASDAQ, don't want to take the VC money, and you would benefit from being a public company. So let's be clear, going public is not right for every company. It's a big deal to be a public company, especially in these markets. I mean, there's a lot of companies right now that it's really hard to be public right now. But if you are a sophisticated management team, you understand how to use the public markets for your growth. What's the number one thing that public companies do is acquisition, right? If you will have acquisition currency through your stock to make those acquisitions, which right now there's a lot of cheap companies to buy, right? I mean, this is, if you were a good public company with a good stock, you could be really taking advantage of being public. So the number one thing for everyone, any CEO listening to this, is, should your company be public, right? Is there a reason to be a public company? So I say, is there a reason? And the biggest reasons are acquisition currency, diversifying your shareholder base, access to permanent capital, very different than taking venture capital or private equity, right? And a streamlined path ultimately for US companies to get to NASDAQ. So here's the pathway. Think about coming to TSX Venture, and we could talk about the kinds of company that makes sense for. At an earlier stage, so let's say it's your Series B, you're raising 15, 20 million, somewhere around there, and you are on that track to get to NASDAQ one day. So you come to our market, you graduate to Toronto Stock Exchange in a year or so, and then when you're big enough, and really when you're relevant enough, then you dual list onto NASDAQ. And we have several companies that have done that. We have about 250 companies that are dual listed between the two markets. And so it's a well-worn path.
And how do you work with angel groups?
Yes, good question. So, as you know, I'm connected to all the angel groups here in LA and of the territories that I cover. And it's because, we see it as a pipeline, right? And so, and also, I personally am very passionate about entrepreneurs knowing all their options. And here's the thing about going public. If you want to make it easier for you later, start acting like a public company now, right? So
Yeah.
when you're getting that angel investor money in right now, before you're even at the Series A, we've seen all the pitches, right, guys? Like, how many pitches we've seen? If there's a CEO that says, I'm building a company that's going to be sold in a couple of years, versus the energy of, I'm building a company to take to NASDAQ one day, like from day one, I'm pitching to angels. I'm saying, this company is going to NASDAQ. That's a different energy. And it's also a different discipline of how you're building a company. It will impact the people you hire. It will impact how you manage your money, which is, super important, because the discipline of being a public company benefits all companies at all stages, right? Especially on that internal controls and fiscal management. So when I talk to angel groups, it's about here, because you're only as good as your next round of capital, right? So when you're raising this angel
Right.
round, you have to be thinking about, how is this round going to impact my ability to get venture capital or go public one day or do crowdfunding or get debt, whatever it is, right? So it's, if you can see the path for the next 5 years, starting when we're taking that critical angel money, it can really shape how you build your company and lead to greater chance of success, whether you go public or not at the end of the day, right? But if you are thinking about it, preparing for it, it can change the trajectory.
Yeah. So one of the things that I was trying to do, or I still am trying to do at TCA, is figure out a thing called Path Forward. How do we help our portfolio companies? And I think we have 279 still existing out of the 550 in which we invested over 27 or 8 years.
Amazing. Yeah.
I'm just wondering if I can get you in front of these portfolio companies, set up a Zoom, and you can talk about that quote path forward for additional financing. Maybe it'll help them, including some of the ones that I've invested in.
Absolutely. Well, I would love to. And again, I'm very passionate about know your options, understand understand the game you're playing, right? Listen, every external dollar comes at a cost, as it should. It's not your money. So, but in my mind, it's every CEO's responsibility to understand all the capital options, weigh the pros and cons, and then ultimately make an educated decision on what's the aligned capital, right? There's money out there. There's all kinds of money out there now, but what is the right money for you and your company and your shareholders and your employees and your customers long term? Like, so I always say, play out the cap table, right? Like at the angel stage, play out the cap table of, if you take, series A, B, C, D venture capital and magically get sold, which by the way, we know that path doesn't happen for very many companies, right? So, but play out that cap table in the good times and the bad times, right? So 2021, you're taking that money with an exuberant valuation that everybody drank that Kool-Aid.
Yeah.
Play
Right.
out that cap table when the inevitable downturn happens, because we all knew that year was insane. We all knew that was an anomaly, right?
Yeah.
Play out the
Yeah.
cap table. Play out the cap table if you go public on our market, or wait to get to NASDAQ through venture capital, which takes a lot longer, right? How does that impact your employees? How does it impact your friends and family who put that money in, right?
So let me jump in here, because obviously David has a lot of experience and knows you well and knows what you do, but I'm coming in pretty cold here, and I'm trying to piece together the various things you've already told us about. So there's a TSX venture piece that sounds like it's different than the TSX exchange. It sounds like it's earlier. It's a
Right.
way to get involved earlier. But at what
It's two different stock exchanges. Just one's for earlier companies and one's for later stage companies, but they're both
Perfect.
regulated stock exchanges. Yes.
Perfect. And so, at what stage exactly would a CEO start thinking? I heard you say the B series raising
Mm-hmm.
15 million. So instead of doing a series B,
Mm-hmm.
should they consider going into TSX Venture?
Yeah. So you want to be thinking again about, as soon as, once you have significant institutional um, money on your cap table, then that money, they don't want the company to go public earlier, right? Because then they lose the preference shares because everyone's converted, right? So it's companies that want to look are on a different path. So it's typically around Series B that starts to happen. So let me just give you some numbers to put things into perspective. So the average financing on TSX Venture Exchange, this is all companies who are financing, is around $6 or $7 million. So that's like early stage capital, right? Some are higher,
Yeah,
but on
like a
average,
Series A.
yeah.
Mhm.
And then so it's like the next round that I would say for US companies makes the most sense. And also for Toronto Stock Exchange, the average financing is more in that 75 to 100 million, right? So those are
Yeah.
bigger, but still not as big as NASDAQ, right? We're still a small cap marketplace.
Yeah, so angels are typically investing in seed
Mm-hmm.
stage or maybe Series A.
Yeah.
And I still didn't hear the clear, crisp, just dumb cost and get it in my head really easily. Should a CEO trying to raise a Series A, meaning 5 to 7 million, consider a TSX venture? Or should it be like the CEO considering a Series B? They've had a Series A, now they're looking to raise 15 to 20. That's when they should consider TSX venture.
Well, I would say both of those CEOs should be having a chat with me to think about if this is the right pathway for them. Because
Yeah.
there's the reality of the markets that come into play, right? And it's also what sector you're in, what's hot. Yes, some companies can raise their, like it's 2021 pre-revenue, raising their Series A. On our market, we had a ton of those companies. Today, you need revenue, path to profitability, and likely you're further along. So you're further along because you have to have revenue. So depending on your sector, like where you're at, if you're CPG, if you're high tech, if you're AI, if you're clean tech, like those are different industries. But I would say, once you start talking about institutional capital, whether it's your Series A or Series B, is you should at least have the conversation to see if this is the right path potentially for you. And then, because it takes 9 to 12 months to go public, right? So you may be finishing your Series A now, and then your next round makes sense because that's what the markets are going to be interested in. Or, in a couple of years from now, it's going to be a different market again, right? So it's just thinking about it at the stages. Yeah.
All right. So let me jump on in because that leads to a really
this might be our last one, David. We're getting tight on time here.
Yeah, I understand that, but this is really important for the CEO. How should a CEO that's considering next round funding, be it A or B, prepare themselves for putting themselves on the TSX venture? And then
that's a great question.
Then you can close it up with some
I was going to ask the same thing.
Yes. So they should be talking to me is the first thing that they do. And so that, because I can walk them through the process. And I'll just quickly say there's two things that happen when you go public. Simultaneously, you're on two tracks. One, you're getting your company ready to go public. So audited financial statements, disclosure level information about the company, whether you do an IPO or a reverse merger, you have to have a certain amount of company that you work with your lawyers on, packaging up the company, making sure you meet the listing requirements of the exchange. So that's where you have a conversation with me. So you're on that path of getting ready to actually apply to the exchange to go public. The second track you're on is actually raising the capital. So let's say you're raising $10 million on our market. So now you need to be speaking with Canadian investment bankers, brokers, family offices, institutional investors. I make a lot of those introductions. But so those two things are happening simultaneously. You're getting the company ready to go, and then you're talking to investors about the money you're going to raise and then how you're going to list. So those are some things. And we have on our website, us.tsx.com. Is our site for U.S. companies. The U.S. guide to listing is there. My information is there, but that's where you start.
Got it. All right, Costin, over to you.
Yeah, well, this has been super fascinating. I'm sure like every entrepreneur dreams of the day that they take their company public. And it sounds like TSX offers two options to get you on that track. And I think that's amazing, especially in this market where it's quite difficult, quite challenging to raise capital. So I think, Delilah, you brought us a lot of really valuable information, and just wanted to say thank you for that. David, any final thoughts?
Yeah, I'm looking forward to on screen being part of the TSX.
Come and ring the bell,
adventure,
yes.
isn't it?
Yeah.
I just wanted to give you a shameless plug for your company.
Well, the world's only getting older and the silver tsunami's coming. So I think on screen we'll have some of those capital needs. But thanks for the plug. And again, thank you, Delilah. It was a great meeting you. And this was an awesome session. Thank you for your time.
Thanks, guys. Thank you.
All right. And you out there,
I'll catch you guys
the audience,
later.
hit subscribe, hit like, share, get the word out. Thank you, guys. Take care. Bye-bye.